It is inspiring to see Prime Minister Modi. He is an amazing student who adores technology and artificial intelligence every time I meet him. He was among the first individuals I spoke with about artificial intelligence. Since the entire computing stack is being reset, this is a unique moment for him and India. I haven't actually gone through it. For about 25 years, Nvidia has operated in India. We have design centers in Hyderabad, Pune, and Bangalore. There, their engineering skills are just amazing. India is home to around 10,000 NVIDIA engineers. They have been a part of our organization since the very beginning because they handle every single area of our engineering. That's how we do things. We are a completely different business, as you are aware. NVIDIA constructs the entire AI infrastructure stack. We manufacture chips, systems, networking, CPUs, GPUs, and switches, among other things. We create a vast amount of software, ranging from artificial intelligence apps to algorithms. We are therefore committed to continuing on our current direction. To be able to use all that technology in this new world, you actually need to be a computer infrastructure firm, in my opinion. Meetings with the Prime Minister have been a lot of fun. I was thrilled to be here to discuss technology, artificial intelligence, India's prospects and opportunities, and the influence on Indian industry and society because he is such an amazing student and always wants to learn more. This is a fantastic chance because, as you are aware, India is also home to some of the best computer scientists in the world. Additionally, the manufacturing sector of artificial intelligence is a new and crucial one, so I'm looking forward to working closely with India to make that happen. India and we have numerous partnerships. We're assisting India in obtaining our most cutting-edge technologies to start. To build the newest generation of AI supercomputers in India for all startups, we're collaborating with internet providers like Yoda and end-to-end networks. Since India has the third largest startup economy, AI is the foundation of this new wave of businesses. You need AI infrastructure to accomplish this. Take a look at how many collaborations we have in India. There is an NVIDIA AI Center of Excellence at each IIT. We are training students and professionals to become more proficient in this emerging field of artificial intelligence. Although artificial intelligence, AI, is a complex technology in many respects, it ultimately allows a nation to utilize computers and technology in ways that were before unthinkable. Thus, AI truly makes computing more accessible. India's time has come. You must take advantage of the chance. Goldman's Tony Pasquariello today, as you can see, what he says is, choppy but why the trend is still higher. It's a hard arrangement. Although there will be bumps in the road, the market is bullish and the main trend is still upward. Tell me what you think. They are exactly the right fit for Mr. Pasquariello. However, given how simple it has been to profit from the market, you have to be a little uneasy. Given how much the market has actually recovered, it shouldn't be this simple. You had not even a clue. Even though there was a decline in semis and big cap tech, I wouldn't consider it a correction given that the stocks are up anywhere from 50% to 150% to 200%. It's concerning, yet nothing seems to be standing in the way. Now, if you keep the West Coast open, there may be blips, or rather bips, such as the port attacks that will occur on the East Coast and the Gulf Coast. People might be worried about inflation, but I don't think that will last long, and I believe that it is resolved prior to the strike. The point is that you can never predict what will happen to the market, but I do believe that you should have some cash on hand because it is simply not natural for it to be this simple and continue to rise daily. Does it matter when and how many cuts we receive? Because, well, the market clearly has its own expectations if you, today, could be discussed seeing many more. He stated that the Fed needs to continue to keep ahead of the labor market's downturn. Quote, rates must decrease significantly. Kashkari was rather more composed. He discussed going more slowly. On Friday, we do receive PCE. We will now be attempting to ascertain the true pace and scale while sort of listening to anything they have to say. How much more? I don't agree with that. The market doesn't need many more in my opinion. That suggests a substantial economic decline of some kind. That isn't, in my opinion, where the market is. The earnings season is something I eagerly anticipate. From where we are at the moment, I believe that to be the possible catalyst. And to return to the starting point of the show, where would you like to be? It's crucial, in my opinion, that viewers realize that many of the locations that have proven effective thus far are also those that will continue to do so in the future. Continue using the big capitals. I keep bringing up small cap trading. Since the Fed meeting was announced, I have been trading the Russell futures on the short side. In the event that the Russell was going to rise, it gained 50 basis points after the Federal Reserve. Now is the time. If you require any additional clarity, please let me know. Yes. With only grammatical corrections, here is the continuation. I am aware that we have a few charts. Let's examine what Russell the IUM has done since Wednesday, if we can show them. Fantastic. It has returned to its pre-announcement state. With the Russell, what else are we waiting for? The Russell wanted its 50 basis points in a favorable economic climate, and this is precisely what it got. Do you know what we're anticipating? Verification or a stronger conviction that a soft landing is in order. Rate reductions are meaningless until the economy actually makes a soft landing. If you don't believe that the Fed can pull this consumer, why would you purchase small-cap companies, many of which are in the financial sector, by the way? Large-cap financials are doing nicely to start. Healthcare is the industry with the most weighted in small caps. You now claim that you will wait for the soft landing. I've heard from everyone that the gentle landing has arrived. Since the soft landing has already occurred, I require additional proof and information. The unemployment rate must drop to exactly below 4% for me to be satisfied. Nobody is telling you that. Who are all of them? Even Gooby, who sounds as dovish as it gets, remarked that the labor market was becoming weaker. Still, Scott, there are enough serious worries that they will succeed. Putting 2 feet in the pool is not something you will do. It is not declining from a 4.5% to 5% unemployment rate. Rather, it is declining from an historic level. It's losing ground on a historical scale. Indeed, I keep hearing that we're in the middle of a soft landing from the analyst communities and all of the investment banks. The idea is straightforward. If you can, set up a QQQ chart. Everyone keeps telling me that you want to switch from big caps to small caps for this rotation. Examine the QQQ's performance following the Fed's pronouncement. The rotation ought to have started at that point. We should be discussing a Russell that is up 2.5% from Wednesday, not flat. When you get the 50 basis points, when the QQQ is the one that is up 2.5%. Jenny, what are your thoughts? We're talking about. That's precisely what we're talking about here. When Citi talks about it at the index level, that it will be more difficult. Their bull case is 6,100. For year-end 2024, their base scenario is 5,600, which is lower than where we are at the moment. Okay, so this is where Joe and I don't agree. You said that when we were cut, the rotation ought to have begun. Therefore, Scott, I completely concur with Citi's statement that it will be difficult at the index level. We are still in a bull market, both outside of the index and in relation to the first point. Therefore, this quarter, I see things a little differently than you do. Small and mid-cap stocks are up 10%. The Dow Jones Select Dividend Index is up 12%. The S&P is up 4%. Tech is down 0.11%. Utilities are up 17.2%. Real estate is up 16.2%. And financials are up 10.5%. Therefore, it appears to me that a great deal of that expectation was raised until the rate cut. After that, everyone simply stopped. All right. Making money shouldn't be so simple whenever you have. And this brings you to your point. Okay, so until the cut, we made a ton of money in those industries. We're just halting now. The problem is, though, I believe you believe it ends there. It appears to be a pause. And since we are aware that this will be a soft landing, what do I believe we need going forward? Nobody is contesting that. For quite some time, we have been in a gentle landing. After this, it appears like we will be in a gentle landing for some time. Earnings are now what we need.